Welcome back. This is special programming, Market Masters, and we have with us the ultimate master, Mark Mobius, Master of Emerging Markets and Master of Investing. Mark, we've spoken a lot about India and the equities out here. What's interesting is the sort of run-up that we've seen in the commodities space. A lot of these hard commodities having seen big multi-year rallies. Any preferred equity plays via this space? Do you like the metal space in India, gold, silver? How do you play that?
That's a very, very good point. And I believe that every portfolio should have some physical gold. Very, very important. And you can see what's happened to gold and silver. Silver is going to be, already is outperforming gold. And I think there are a number of reasons for that. Probably the primary one is that globally, there's a new generation of investors who really don't trust the central banks around the world and don't trust the currency. And they want to hedge their portfolios by buying gold and silver. So that's going to be a very interesting development. And of course, as gold moves up, other metals move up as well because they're betting on commodities in general to preserve their wealth. So we're seeing a big, big shift. And of course, if you look at the cryptocurrencies, you'll see they're moving up at a fast pace as well, in line with gold and silver.
Okay. Mark, just on that point on commodities, I know you're an India bull, but we also have Brent Crude, which is at $90 per barrel. We have tensions simmering between Israel as well as Iran, which could potentially be a risk for crude prices. Do you think that could be a deterrent, at least in the near to medium term?
I don't think it'll be deterrent. I think there'd be a gradual increase in the price of oil and in dollar terms. And of course, that's reflecting not so much the oil price, but the depreciation of the dollar. The dollar is, of course, very, very plentiful. As you know, the Fed has been printing and printing. Now they're reducing, but still it's an awful lot of dollars out there. And that's a reflection of the weakness of the dollar, this oil price, and commodities in general, by the way.
Just to follow up on the crude bit, do you look at oil marketing companies as investable options?
Yes, we do, but we're more interested in oil companies that are exploring and are having the technology to discover new oil. So that's one area which we think is quite interesting.
Any other commodities, industrial metals which stand out? I mean, copper, for example, is being, we were supposed to have a big copper super cycle in 2021. We had a sharp move, but then that fizzled. Do you think, copper perhaps makes a big comeback? Just your view on other industrial metals.
Well, I think nickel is worth looking at. Nickel would be one area, mainly because of the battery.
Okay.
Electric car battery consumption is increasing. The need for batteries. So nickel might be interesting, but you've got to be very careful with these commodities because at the end of the day, the supply-demand equation could be really a problem. But we have to look at that.
You know, Mark, you briefly mentioned about interest rates in the West, right? Do you think, so US rates have gone to 5%, 5.25%. Markets in the West have done very well. So one can say, well, if rates going up did not hurt, if rates coming down, will they help? But on the other side, for emerging markets, if rates come down and the dollar weakens substantially, I mean, that is a time-tested kind of correlation, right? It means more flows into emerging markets. Sitting here in India, is that the bet to make? Whenever rate starts to come off and the dollar goes south, I mean, that basically pushes a lot of money towards EMs?
Yeah, generally speaking, that's the case. If you see rates come down, it'll be more attractive to go into emerging markets. But the shift to emerging markets have already begun. You must remember that if you look at the US market and the Indian market is a good example, but other markets, Korea has done well, Taiwan has done very well. So people are beginning to diversify away from the US market, knowing that the US market has performed very well, but may not continue this trend. So I believe that you're going to see a lot of people diversifying into emerging markets, regardless of what the interest rate is. Now, of course, a lower interest rate means that people are going to be putting more money into equities.
Okay. Mark, we're starting earnings season soon with TCS. What is your sense in terms of the IT space, considering the global demand situation? Any IT stocks specifically that you like, considering there is a lot happening with regards to artificial intelligence as well?
Yeah, that very good question, because artificial intelligence is really changing the scenario for software in general. And those companies in the software space that are not taking advantage of AI will be in trouble. But I believe that they have grasped the opportunity, and there'll be actually more opportunities for the Indian software companies to export their software. So I'm quite bullish on software in general, and I believe that companies that are in this space will do quite well.
You mentioned in passing about the world moving to electric vehicles. I wanted to know whether you've bought an EV yourself or not.
No, I don't drive.
All right. Maybe he flies in the private jet. But
it's interesting that here in Dubai, if you select an electric vehicle to hire, it's more expensive than the regular petrol engines.
Yeah, understandable, given its proximity to oil. But, speaking about that theme itself, a lot of people call Tata Motors as the Tesla of India. With money coming out of the US going into India, do you, where are you on that?
Well, I believe that, of course, the industry in India will grow at a fast pace with more and more people able to afford AI and companies that are in the space of applying AI to automobiles. And that's going to be a very good development. But electric vehicles are the future for India as well.
And speaking about the Tatas itself, I mean, a lot of these conglomerates have come back as well. We've seen, big announcements come by from the Birlas trying to set their house in order for a lot of their companies. The Tatas, of course, have been big wealth creators. Your thoughts on some of these conglomerates? Is there anyone that you like?
Well, Tata is probably the prime example of a company that's done so well in so many areas and really improved the quality of various sectors. If you look at what they've done in the airline sector and in so many other areas, and they're really a leader in many of these sectors. So I would say that at the end of the day, Tata will do very well simply because the demand in India is going to increase tremendously. And there's going to be a demand for electric vehicles.
Right. Mark, pre-COVID, for the 10 years or so before that, it was all about services, right? It was about technology. It was about not tangibles, not hard infrastructure. That's changed over the last couple of years after COVID. I mean, I think the world's woken up to the fact that manufacturing capacities in many areas actually is not enough. So there is a revival towards that. I just wanted to understand from you the big picture over the next couple of years. What are the big themes within manufacturing? Is it electrification? What within electrification? Is it cars as a theme to play? Is it power? Is just your overall sense on what are the big manufacturing themes which will do very well? Because at the end of the day, I mean, it's all in a way global. What happens globally comes here sooner than later.
Well, the key to the entire system now is technology. When we go to a manufacturing company, in fact, any company that we're looking at, and we talk to the management, the first thing we ask is, what are you doing in technology? How are you using technology to improve your profitability, improve your efficiency? And that is the key theme. And in manufacturing, it's going to be even more important because with robotics, with AI, the efficiency is going to be improving dramatically. And that's something that we have to look at and be aware of. You cannot be investing in a company that's not using technology to improve its profitability and its efficiency. So the prices, by the way, as a result of AI, will be coming down in real terms. And therefore, the competition will become much more fierce.
Okay. Mark, before we wrap up this conversation, you've previously given a target that the Sensex is probably going to hit that 1 lakh mark probably in the next 5 years. Leave us with any kind of targets for the Nifty and the Sensex, maybe near term, maybe long term, maybe 3 years, 5 years.
Well, I stick with that target. I think that's going to happen maybe even sooner than I expected. No question.
All right, 1 lakh over the next couple of years on the Sensex. Well, Mark, it's a pleasure having you with us here. Thank you very much for joining us, and good luck with your fund. And we hope to speak with you, around through the next couple of months, and of course post elections as well. Thank you indeed for joining us here, guys.
Thank you very much. Thank you.